Here's the lowdown on rates. Rates are actually really good over the last 3 years. We hit a 3-year low again this week briefly. We're really bouncing between 1 year and 3-year lows. But at the end of the day, we're looking at rates with no points, just below 6% on 30-year fixed conventional loans. And again, you can buy down to that 4.99 you see advertised for your builder, for your resale clients with seller concession. So heading into the weekend, want to make sure you know investors can purchase with bank statements and or stated income. Basically right now we call it a DSCR loan, but it's basically stated income for the most part. We're not taking any borrower income. We're qualifying those properties on the income of the rental survey and or the rents if there is a lease already in place. It is a primary owner occupied single family residence or condo purchase up to 80% loan to value, no income verification from the buyers. That's right, no income, basically stated income on primary owner occupied residences in California, Idaho, and Texas. You can even do a cash out refinance on the same program, no income verification on single family residences, primary owner occupied residences, California, Texas, and Idaho. If you need a pre-qual and a pre-approval letter over the weekend or a DU run, we're available by cell phone 949-584-4600. Afternoon, everybody. Michael Foot, 505. Hope everybody's having a great day. Hey, quick announcement. Fed lowered rates by a quarter. Those rates are already baked in, guys. So the rates that we're seeing, high fives, low sixes on standard conventional 30-year fixed, is probably where we're going to end up. Typically what happens is the last couple of days, we've seen prices go down by about a 0.25%, not rate, price. And for the standard conventional product, that means a rate of around 6%. What does this mean for you going forward? All the realtors, everybody wants me to tell them, hey, rates are going to be in the fives next year. We're going to go back down to the fours. It's going to be amazing. The reality is I just don't think that that's the case right now. I don't think our government and our political environment, our economic climate is going to allow for these rates to go much lower. Mortgage Bankers Association's forecasting rates in the sixes through 2027 right now, which is kind of a change of pace. Everybody's expecting the Fed to start dropping rates. Trump wants rates to drop. Everybody wants rates to drop, but inflation is still sticky, and we're kind of at a weird time in the economic cycle. So there's nothing to say that we're going to get rates that are in the low fives. What you can do is you can buy that rate down. So don't forget, buy downs, seller concessions, even on resale properties can happen. You can get that 4.99 30-year fixed rate that you see CBH advertising. You can get that on a resale home as long as the seller is willing to play ball. But that takes me to my second point, which is appraised values. So as the market continues to adjust, we're starting to see appraisals have challenges. So for instance, delayed financing. A buyer comes into a new area, buys a house in California, Idaho, or Texas, pays all cash for it, and then a few months later wants to go ahead and do a refinance, get some of that cash back, and get a reasonable mortgage payment. They have more time. They're not worried about the escrow process and being over 30 days, et cetera, et cetera. They have more time to get ready and focus on getting the actual loan done. In those cases, if that salesperson on the real estate side sold them a house that's far overvalued, or maybe that particular neighborhood is adjusted downwards, we're starting to see appraisals come in lower than sales prices. And that's what happens at the top of market. It's not rare. It does happen. But don't forget, the appraisal is the buyer and the borrower's protection. Our job is to make sure you know what your asset is worth in today's market. And so don't be offended if you paid 2.1 million for your house and your appraisal comes in at 1.8 6 months later. Yeah, that can happen, especially on the higher end properties. Their adjustments are even bigger, wider swings at times. So again, if you do delayed financing, you want to cash out. Good morning, good afternoon, good evening, good night. Hey everybody, good afternoon. Michael Foot, 505. Quick announcement about the Fed reduction in rates. Looks like another quarter point. It did absolutely nothing to the rates today because that quarter point was already packed into the rate sheet. So hopefully you've locked your loans in the last week and or choosing your lender and are ready to lock your loans, because chances are we're going to float back up a little bit. Typically, it's what happens before the Fed announcement. We get a reduction in rates, which we got a quarter point better over the last week, a quarter point better in price, not rate. And the announcement comes and then rates fluctuate and float back up. MBA is forecasting rates in the sixes through 2027. Is that the be all end all? Is that what's going to happen? Not necessarily. Nobody can predict the future. But right now, with inflation staying sticky, the stock market at an all-time high, the economy is kind of running on all cylinders still. We're not seeing lots of job losses, although I've seen some being reported lately. We still have a really healthy economy, and the Fed doesn't want to lower rates in a great economic environment. We're going to need some hiccups to really have some big adjustments in rate. And unfortunately, that means people losing their jobs, and that means inflation going as close to zero as possible, if only less than 2%, like the Fed wants. So again, rates are down. Is it a massive change? No, it's not. But don't forget, you can still buy down. And if rates are going to stay elevated for a longer period of time, like they're now predicting, we're going to stay in the sixes through 2027, then a buy down makes more sense. Even on a refinance, you can buy your rate down below 5% today. It's going to cost you a lot, but if you're buying the home, get the seller to make a concession, get your realtor to make that offer to where they're going to agree to massive reductions in concessions. You can do 6% seller concessions on most products. Some are maxed at 3%, but don't forget that you have the ability to buy down. If you're thinking about a cash out refinance or rate and term refinance, you can do buy downs on those as well. So if the standard 30-year fixed rate is 6% today and you want to get to 4.99 because that's going to make you feel more comfortable, then I would say now is a good time to do that and to pay the points to buy down the rate, because if we're going to stay elevated for a longer period of time, the buy down makes more sense. And don't forget, points and discounts paid are generally tax deductible. Contact your CPA, but they're considered advanced interest. So you're basically just paying advanced interest to get that lower rate, and sometimes the IRS will let you deduct that. So make sure to talk to your CPA about that as well if you get into a scenario where you're thinking about buying down the rate or using massive concessions. We'll talk to you soon.